Hi folks, welcome back. Hope you are doing well. In this video, I'm going to show you a gold strategy that work on a London session and have a 70 plus win rate. And in this mechanical strategy, you don't need a daily buys. Okay, so make sure you watch this video till end because I'm going to share with you some secret sauce which will increase your win rate at the end of this video. So before I get started, if you are new to our YouTube channel, make sure you subscribe it. Let's get started. So in this strategy specifically, first thing what you have to do, you have to choose a gold chart, okay, and a 15-minute time frame, okay. And as I told you, this work on a London, so mark out 3 a.m. and 7 a.m. okay, because this work only in the London session and only in the gold. Okay, so now what we have to do, what is the strategy basically, what is this mechanical strategy? Okay, so overall you don't need a bias on this strategy, but if you use a bias with this strategy, it also increase your win rate and it's also good for your knowledge as well. Okay, so in 15 minutes you will wait for a first fair value gap that form in a gold in London session in a 15-minute time frame. Okay, then you will wait that fair value gap will be inversed and you will take trade in the closing of that candle that inverse that fair value gap, or you will wait for a retest of that inversion fair value gap and you will target 1 to 2 risk to reward. Okay, the thing is that first fair value gap should only and only form in the London, okay, and that should be a first fair value gap, not a second, not a third. Remember that first fair value gap and have to make in London session, only in London session. There are some secret sauce that will increase your probability, so make sure you watch this video till end. Okay, and you will take that trade in the retest of that inversion fair value gap. So now you understand the theoretical point of view. Now let's jump into the practical. So here I am using this indicator FXN Asian session range. This green box is representing an Asian session, a blue one is for a London, and red one is for New York. Okay, one thing is remain, I forgot to tell you, I will explain here. Okay, our first criteria is the gold chart, 15 minute. Okay, mark out the 3 a.m. as you seen here. We have this New York. Okay, UTC, some people may have confusion about UTC 5 or UTC -4. Okay, remember that in November, okay, in the beginning of November, New York daylight saving time start. Okay, as you know better, the 1 hour will be going forward. Okay, so everything in your country will, for a trading perspective in New York session, will be 1 hour delay. For example, if you are from any country and in your country the New York session start in 3 p.m. during the daylight saving time, that New York session will be shift into 4 p.m. okay, that 1 hour will be forward. Understand now? Okay, the main thing is your chart will be always on New York. Okay, UTC -5 or UTC -4, it will be sessional. Okay, you don't have to worry about that. Now, so we mark out the 3 a.m. and now mark out 7 a.m. So we have this London session. Okay, now what we have to do as we mark out our range, now first thing what we have to do, we have to find the first fair value gap. Okay, once it's made, we will sketch it all the way to upside until it's got breaked. Okay, remember, fair value gap can be made in London session, but trade can be executed in New York session or any time in the day, okay, before 4 p.m. Okay, so we see the first fair value gap, right? So as what is this? This is CB, okay, sell side imbalance, buy side efficiency, okay. But what happened? Price close above it, what is become an inversion fair value gap. Now these CB can be used as a BC, buy side imbalance, sell side efficiency, as an inversion fair value gap, right? So what you can do once you see that, either you can take trade in the closing of this candle, or you will wait for a retest. It's both up to you or up to your money management. All right, so you will take trade a long position here, and you will put all your stop loss on an order block, on a swing point, or that fair value gap with a big candle. It's all upon on your money management. For me, a swing point or a candle which broke that one, okay. As you can also add some multiple confluences, that is like a fair value gap here, okay. You see here is a fair value gap, right? So you can also consider that price should not come to below this fair value gap, or if it wants to come, there is the order block. It should not go to below that order block. Now once this happen, then you have to only set 1 to 2 fix. The thing is, now you have to written down. I am going to sharing with you some secret sauce one by one. So the first secret sauce is that always take partials on any swing points. If you see any relative swing point, you also take a partial. Second thing, you will take your stop loss into break even once you reach 1-to-1 risk to reward. Like once you reach 1-to-1, you should move or take some partial on that point, okay. So because this is market, it can be reversed for any reason. Now geopolitically, you understand something going on in Middle East and blah blah blah, okay. So now we will go back on another day, and we are mark our 3 and 7 clock T, okay. So after that mark out, what we will do, we will find out the first fair value gap. So this here is our first fair value gap, excuse me, and we will sketch it all the way to the side here, okay. So what happened? Price go break it, okay. So you can trade once it's breakdown, but you can also wait for a retest. Why? This candle is huge and your stop loss can be bigger, because you have to put stop loss here, because here is also fair value gap. Price can retest this area, or here is the swing point, here is the order block. Price can retest this area, so you have to wait, or sometimes you miss the entry as well. So you have to point out this thing in the mind, that trade is not for always every day. And here you are 1-to-2 risk to reward, okay. Once it reach 1-to-1 or any liquidity here, okay, is can be a previous day low, highs, old week, or opening gap, whatever is that you are targeting. So some confluences should be in your mind, not trade blindly, that's all. Now another secret sauce I'm going to be sharing with you, that is the liquidity. Main thing, that is the liquidity, okay. So here what happened, this fair value gap, right? What happened? We got the liquidity, right? What remains the liquidity? We have these equal highs need to be swept at the previous session, okay, previous day session high. Once it's got out, you should have pretty confident that we are going an opposing side a liquidity. What is that? That can be this low, that a previous day low, okay. We before we swap a previous day high, then previous day low, right? So you should have some sort of confluence. As you seen here, price once when it reach here, it did not take this low. Okay, it means there's some remaining work there, some remaining orders are available in the market that have to taken from here, right? Let's go on and boom, downside. Now let's move to the previous day. First candle, a third candle, right? I also showed you some losing trades as well, and in that losing trade I'm going to share you a last secret sauce. First fair value gap is this one. Okay, one thing more I'm going to share with you now, just a moment. Here this is candle 2:45 p.m. okay, before a 2:45 a.m. this is 3 a.m. and before 3 a.m. this is the 2:45 a.m. and this is 3 a.m. candle, and this is 3:15 a.m. candle. Okay, you always only and only consider the first fair value gap if it's occur, if it can happen in 3 a.m. candle or after 3 a.m. candle until 7 a.m. candle. Understand? You should not, because the fair value gap make from 3 candles, 1 2 3, and first candle and the third candle, between that gap is a fair value gap, right? So if sometime you will see a fair value gap in 2:45 a.m. candle, so you should not consider that fair value gap as a London fair value gap. Okay, always remember that 3 a.m. candle gap till 7 a.m. candle gap, between in this time frame, the first gap you got, you will mark that one. Okay, I am pretty sure that you understand this thing very well. So this is the first fair value gap, we mark all the way. Okay, and then we wait for price to close above. Either we will take entry or we have another confluences, like you see this fair value gap, price tap on it, and we have 1 to 2 risk to reward. Here, okay, once you reach 1 to 1, you put your break even and also take some partial, like this is your fair value gap, right, or a block. So let's go back side and see, did we got another? Okay, here we got, I think, SL. Let me show you an SL also, and here is the secret sauce also. Okay, so as we're going downside, here is our first fair value gap, right? Okay, make sure you back test this for your more information. So we have this CB. Okay, we have this CB. What we do, once this CB got like this closed, we are waiting here for a buy, right? But eventually what happened, price did not respect and hit our stop loss. Why does that? Why we should not take this trade? Because as you seen here, price took out the liquidity, sweep, and immediate give us a reaction, right or not? Right. Okay, so if you see some sort of liquidity and you also see the trend, the previous structure, right, you have to understand. Okay, as you seen here, before this fair value gap we got this break of structure, right? As you are an SMC trader or ICT trader, you understand this point, and you also see this. There is the confluence. This is the some major secret sauce which can increase your win rate incredibly. The liquidity, okay, and your fair value gap. That's all. You all need this thing. Understand? So as you see here, the your losing trade. Okay, so here another losing trade, but with our last secret sauce. After that the video will be closed. What is that? We are waiting here all the way, no fair value gap, but in the last hour we got a fair value gap. So what is the secret sauce? The secret sauce is that if you see any fair value gap after 6 a.m. of New York time in London session, that will be very low probability. Okay, immediately close and immediately SL, right? Because as per my back testing, any fair value gap that make it or occur lately after 6 is very become a low probability. Any fair value gap that happen between a silver bullet time frame between 3 to 4 become a very high probability tap. Trust me, just try one time and let me know. Okay, I hope you learned something from this video, and make sure you subscribe our channel, thumbs up this video. I made for you this. Okay, and everything is free, and more content, more valuable content coming, folks. Okay, until next time, be safe.